Ever feel like you're working hard, but your bank account isn't growing? You pay your bills, you're responsible, but that credit card balance just lingers. It's a story many Americans know all too well. We're told credit cards are a tool for convenience, a way to build our financial future. But what if they're also a masterfully designed trap? Today, we're pulling back the curtain on how the credit card industry keeps millions of Americans locked in a cycle of debt. It's not about blaming you. It's about understanding the system. Let's start with the bait, the rewards. Cashback on groceries, airline miles for that dream vacation, points for shopping. Sounds amazing, right? These offers are psychologically brilliant. They make us feel like we're winning or beating the system every time we swipe. We focus on the 2% cash back and conveniently forget about the 22% interest rate lurking in the fine print. The credit card companies know this. They've studied our behavior. They understand that the small, immediate reward of points feels more real and satisfying than the distant, abstract threat of interest. This gamification of spending encourages us to use the card for everything, blurring the line between what we need and what we want, all for the thrill of earning a few extra points. It's the first, seemingly innocent step into the trap. Next up is the minimum payment. This is probably the most deceptive feature on your credit card statement. When you see minimum payment, due $25, your brain breathes a sigh of relief. Phew, I can handle that. It feels manageable, like you're staying on top of your debt. But here's the harsh reality. The minimum payment is a financial treadmill. It's calculated to be just enough to cover the interest for that month, with only a tiny fraction, sometimes just a few dollars, going toward the actual money you borrowed, the principal. Let's say you have a $5,000 balance with a 20% interest rate. If you only pay the minimum, it could take you over 20 years to pay it off, and you'd end up paying thousands more in interest than your original debt. The minimum payment isn't designed to help you get out of debt. It's designed to keep you in debt for as long as possible, maximizing the profit for the credit card company. It creates an illusion of control while the debt quietly snowballs. Then we have the interest rates themselves, often called the annual percentage rate, or APR. When you first sign up, you might get a sweet 0% introductory APR. It feels like free money. You can make a big purchase, a new laptop, or a couch, and pay it off over time with no extra cost. The problem is, this promotional period is a ticking time bomb. Once it ends, the APR can skyrocket to 20%, 25%, or even higher. Life happens. An unexpected car repair, a medical bill, and suddenly you can't pay off the balance before the intro period ends. Now that free money starts costing you a fortune, and these rates aren't static. If you miss a payment, even by a day, the company can often hit you with a penalty APR, which is even higher. It's a system designed to punish any misstep, turning a small financial stumble into a deep hole that's incredibly difficult to climb out of. Another subtle but powerful tool is the credit limit. Getting a credit limit increase can feel like a promotion or a vote of confidence from the bank. They trust me with more money. This psychological boost can lead to what's known as lifestyle inflation. Your spending habits expand to match your new, higher limit. That $2,000 limit kept your spending in check, but a $10,000 limit? Suddenly, more expensive purchases seem possible. The credit card company isn't doing you a favor. They're expanding the size of the cage. They know that statistically, a higher limit often leads to a higher balance, and a higher balance means more interest payments for them. It's a calculated business decision, disguised as a reward for your good behavior. They're giving you more rope, knowing that many will use it to tie themselves up in more debt. Let's also talk about the complexity of the agreements. Have you ever actually read the full terms and conditions for your credit card? It's pages upon pages of dense legal jargon. Buried in that text are all the rules about fees, late fees, over the limit fees, cash advance fees, balance transfer fees. This system is intentionally complex. For example, a cash advance often comes with a separate, much higher interest rate that starts accruing the moment you take the money out. There's no grace period. A balance transfer might have a low introductory rate, but also a 3 to 5% upfront fee. If you're not paying close attention, these fees can add hundreds of dollars to your balance without you even realizing it. This complexity isn't an accident. It creates confusion, and in that confusion, the companies profit. So it's not just a lack of willpower. It's a system of rewards, deceptive minimums, soaring interest rates, expanding credit limits, and confusing terms, all designed to encourage spending and make it difficult to pay off debt. It's a psychological maze built to capitalize on our natural human tendencies, but understanding the trap is the first step to disarming it. So what can you do? First, shift your mindset. Stop chasing rewards. The best reward is being debt-free. Your goal isn't to earn 3% cash back. It's to avoid paying 23% in interest. Second, destroy the minimum payment illusion. Always try to pay more than the minimum. The best strategy is to pay your statement balance in full, every single month. If you can't do that, create a plan. Calculate how much extra you need to pay each month to clear your debt in a reasonable time frame. There are plenty of free online calculators that can help you with this. Make it a non-negotiable part of your budget. Cut spending elsewhere if you have to. Treat your credit card debt like the emergency it is. Third, become the master of your interest rates. If you have high-interest debt, focus on paying that down first. This is called the avalanche method. List your debts from the highest interest rate to the lowest and attack the one at the top with every extra dollar you have, while making minimum payments on the others. Once it's paid off, roll that entire payment amount onto the next highest interest debt. This method saves you the most money and interest over time. Alternatively, you can use the snowball method, paying off the smallest balance first for a quick psychological win. Either way, have a strategy. Don't just throw money randomly at your bills. Fourth, set your own limits. Just because the bank gives you a $10,000 limit doesn't mean you have $10,000 to spend. Look at your own budget and decide what a safe, manageable credit limit is for you. You can even call your credit card company and ask them to lower your limit. It might sound crazy, but it's a powerful way to enforce your own spending discipline and remove temptation. Use credit cards as a tool for convenience, not as extra income. A good rule of thumb is to only charge what you know you can pay off in full by the due date. Finally, simplify and educate yourself. Read the fine print, or at least the summary box that details your APR and fees. Understand the terms of your specific cards. If you have multiple cards, consider consolidating your debt onto one low-interest personal loan. This gives you a single, fixed monthly payment and a clear end date for your debt. It takes the complexity and guesswork out of the equation. Knowledge is your best defense against this system. Breaking free from credit card debt is a journey, but it is absolutely possible. It starts with recognizing that the game is rigged, but you don't have to play by their rules. You can create your own. By understanding these traps, you can navigate around them and start building real, lasting wealth, not just a pile of rewards points. You can take back control of your financial life